Winston just told me that Berkshire Hathaway, under Warren Buffett's leadership, just expanded their investment in Occidental Petroleum by buying another almost 3 million shares here. By the end of this video, you will understand why Buffett is buying Occidental Petroleum, the risks and opportunities, and how you too can make money from this play even right now. But before we dive deeper, I want you to learn how to make money from your money. It took me years to figure this out, and once I figured it out, well, I now run a small portfolio publicly for our community here, and we made 126% gains on capital employed in 2022. We did 105% in 2023, and so far for the year, we are up $14,000 on a $30,000 portfolio, so almost 50% up already on the year. If you want to learn exactly how we do that, then come and learn with me. It's actually based on a very simple 3-step system. It's rules, it's automations, it's beginner friendly, so once you set up the trade, you have to look at it again. And come and join me for about 90 minutes on Tuesday evening at 8 p.m. Eastern time, and I will teach it to you. Come and ask me all the questions you've always wanted to ask me, and I'll give you the whole thing for free, the whole knowledge, the whole structure, all of it. Head over to felixrenzer.com/webinar. Grab yourself one of the last seats available. Now, why oil stocks, and why now, and why Occidental Petroleum, and how do you and me make money out of this, and Winston, of course? Well, Buffett's fundamental belief is that oil will be more important to us human beings crawling around on this earth in the future than the market currently believes. So at the moment, oil and gas companies which own assets that produce into the future are basically worth investing into because nobody likes them. Now, a simplified list of reasons which I believe play into this oil and gas stock sector being a particularly wonderful investment for the kind of midterm here is, number one, we've got elections in 2024 in the US. Very, very likely that the White House will, well, support demand for oil. Essentially, they're going to have to fill up the oil and gas reserves, and they're going to have to make sure that prices don't go too nutty. So they have to release oil and they have to buy some more and so on. So actually, government spending is supportive. The Middle East is a basket case as always, sadly, and it accounts for 33% of worldwide oil production. So from investor point of view, the harder it is and the more it costs to export oil from places like Saudi Arabia or Iran or Kuwait or anywhere in that region, the more expensive that is. The better that is for US producers. US producers can charge more while their actual costs aren't going up. Third, OPEC, the kind of association of oil-producing nations who basically manipulate and fix the oil price, they are thought to want to keep oil above $80, no matter what happens. If it drops below 80, they're likely to cut production. That is, again, good for US producers. And because there's so much political pressure on businesses through stuff like ESG, climate change, all that kind of stuff, investments in oil exploration has basically declined massively. Yet the clean energy sources haven't a scale to the extent that they can fill the gap. So what we're left with is a lack in oil and gas investment. And Goldman Sachs, the lovely investment bankers with a golden heart, here's what they say about it. They say, "We believe that the energy industry has been underinvesting since the peak of 2014 with investments in traditional energy, oil and gas, falling 61% from the peak and driving a 35% production in global energy investments." And this reminds me of when tobacco advertising was banned. When tobacco advertising was banned, everyone's like, it's the end of the world for tobacco companies, which I know is a terrible plight for human, civilization, because obviously they really, really care about their customers and they're all very honest and lovely people. But Philip Morris suddenly became an amazing business. Why? There is no new competition, ever. And it's sort of the same thing applies in oil and gas. No one's investing. Therefore, no new supply is entering. So probably holding on to oil and gas stocks, at least the good ones, until oil and gas is completely phased out, if ever, makes a heck of a lot of sense. Just like holding on to the last share of Philip Morris, to me, makes a lot of sense. Of course, none of this financial advice, just an old banker sharing his thoughts. So why now? Well, Oxy has underperformed the S&P by a whopping 60% over the last 5 years. This year, the stock is actually flat, despite Buffett buying again and again and again. Second, we have what I would term Buffett insurance. Buffett has been buying Occidental Petroleum shares in the open market, hand over fist, since just after the Ukraine war began, because he knew that Russian oil was sort of out of the picture. And because Berkshire has $130 billion in cash or something, it sort of puts a natural floor under the Oxy share price, because if it gets really cheap, well, he just goes out and buys some more, right? Look at the stock chart. Every time it zags, he goes out and he buys some more. So it's kind of insurance. And there is something even better. Under Berkshire's ownership, well, 29% ownership now, Occidental has committed to limiting production growth to only 5% of 5%, basically. And it means that they are not allocating capital to massive investment expenditure, but entirely to shareholder return. And that takes a heck of a lot of risk off the table. And it means their sole focus is to return money to shareholders via buybacks and dividends. Why? Because Berkshire wants its money back, right? So what does that do? Well, it creates unbelievable valuations. At the current share price, the dividend yield is 6%. Long-term dividend yield is about 11% through increases in dividends and buybacks, less shares around higher dividends. So you can literally buy something that's likely to give you an 11% dividend yield down the road. It's basically underwritten in terms of share price by Berkshire Hathaway, and looks like there isn't much competition, and it looks like we're going to need oil and gas for the foreseeable future. So what do we do with this? I would personally say, and again, it's not of course, not investment advice, I don't know your particular situation and so on, a longish hold, at least a year. You don't want to pay capital gains on stuff like that, and maybe a little longer, and nibble when the stock tanks. You could also get a bit more fancy and buy leap options or something like that if you wanted to, but probably just a buy and hold approach for the dividend yield alone and the buybacks alone is a very, very sound investment. And it moves us away from just being a pure like tech play or Nvidia or AI play or something. It's a very different industry. And I love stocks like this. I remember, what was it, 2022, I think, when the market did horribly. And my portfolio was pretty good because stocks like Philip Morris did incredibly well. And it's nice to have that balancing act in your portfolio. So I like it a lot. Winston's a fan who's lying on the floor next to me. Let me know what you make of this. If you enjoyed the video, share it with a friend or even a golden retriever. And I look forward to seeing you on the next one. And join me on Tuesday, felixfriends.org/training. Join me for the live training, and we're going to have a blast and actually teach you how to make money from your money. And that can potentially give you the ability to buy more good stocks. That's really what it's about. I'm a fan of owning stocks, but I'm also a fan of making my money sweat really hard so that I don't have to. Winston here just asked me, Felix, which of the AI stocks do you think is going to 10x? What's the biggest opportunity? And then he had to lie down because it was serious.